The US market has dominated for the last 15 years, but is all of that about to change? In today's video, we talk about what's ahead for one of the biggest news events of the month, the jobs numbers in the US. GameStop and Roaring Kitty's new live stream sends the stock hurtling, and of course the US 500 is almost at an all-time high once again. Is it going to keep going though? Well, today we take a look at why gold is breaking out, and more importantly, why we need to look at the data of where the biggest money flows are going right now. Dark pool activity has been heating up, and we need to talk about it. Well, welcome back everyone to The Daily Show. My name's Tom, and in today's video, we're going through a very special topic because, of course, it's the underpinning of why the US market has performed so well and why it's probably going to continue to do so. Remember to subscribe and smash that bell icon if it's your first time here, but let's get into the story straight away. And we'll start here with some data before we get into the key charts, the dark pool activity, and everything else that's going on as it pertains to the next couple of sessions. Most importantly, though, let's understand and go back in time a little bit to why the US market has been doing so well and basically dominating everything around the world. Now, in many ways, I believe it's a huge component of innovation. If you have the best innovative companies in the world, you tend to do very well. But on top of that, it has to do with buybacks. And the buyback era started, funnily enough, around the Greenspan put era of the beginning of QE. Back in 2003, 2004, this is when everything kind of started. And since that point, you can see here with this purple line, buybacks have become an increasingly large component of the US market. And in fact, it's been a huge driver towards the US market's success. So whenever you see a company announce a buyback, it just adds on to the bullish kind of favor of the markets. And you'll notice why when you really look at this chart. I'm going to read out some pretty impressive figures to you. On a cumulative basis since 2009, the issuance of shares totals 2.7 trillion, while the reduction in shares totals 21.3 trillion. That's a huge supply-demand imbalance against the market cap of the $44 trillion we sit at right now. No wonder, of course, the market has gained so much in this secular bull market. And that's what we're in. We're in a secular bull market controlled a lot by the era of the buyback. So yes, okay, innovative companies have done very well, but at the same time, the buybacks have helped to enhance those particular edge and consistency that's gone through. And of course, that's been through banks, that's been through tech companies, and we see more and more seeming to announce it every single day in 2024. And it brings us to a bit of an idea of where are we heading next? We're in 2024, obviously presidential a year election. Now, this tends to be a pretty good run. From this point onwards, if you went through and had a look at most of the history, such as Ned Davis Research did here, you can go check them out on X if you're interested, then you'll notice that it tends to run into the 2025 period. Now, if you've gone through 2022 with us, you would know that that was a midterm year, and they do tend to be a little bit more of an issue. And we kind of expect the issue to usually start somewhere in the back end of 2025. This is where often you get that kind of sideways action. So with the era of buybacks upon us, could we expect markets to probably drive higher? Well, of course, that is one of the discussion points, but you do need some form of economic data to help that. Now, we do have, of course, a bear case that we'll be bringing up in just a moment for the short term. But at the moment, if we have a look here, Sweden has actually been increasing in its overall manufacturing PMI. Basically, we're seeing a huge amount of increase in Sweden, yet the US is actually lagging behind. Now, this, funnily enough, has happened before, and Andreas Steno over on X has posted here, I would be extremely out of the ordinary to see weak US economy with the kind of details we get from small open economies. Yes, I agree. If you actually look back in the charts, you'll notice sometimes this chart is actually accelerating at a faster rate, that is Sweden, than the US is. And it's actually improving, and the US is following or lagging behind slightly. Ended up, sometimes it's in sync as well, such as 2020. But it is a good read on what we might be looking at expecting. An improvement in the US markets that, of course, should lead into a higher market condition. Now, why could this be? Well, part of it is also that we've got shipping stocks going to new highs. In fact, they're above the 2022 levels for the first time, mostly due to problems, of course, in the Red Sea And although I'm not buying these particular stocks, again, it shows you that possibly we've got inflation still around. Now, if you've been watching the channel for a while, you would know that central bankers, in my opinion, are doing nothing to combat inflation. And in fact, they're being partially accommodative of reinflation at the moment as they're terrified of causing a recession. So they're trying to engineer some kind of weird soft landing, no landing situation, which is going to be very difficult. At the same time as that, AI is starting to have its effect on markets. Take a look here. The NASDAQ 100 stocks in the bear market, that is, they've lost over 20%, has actually been increasing recently as markets have gone up. And why is this? Well, it comes back to a video we completed previously in the last video, which I suggest you go and have a look at, which has to do with concentration risk. Now, you may have by now seen that chart that shows Cisco overlaid with NVIDIA and how it looks very similar to a similar point of time, which was, of course, the dot-com bubble, this point over here. During that point and the 19 kind of 60s, 50s era, we got huge concentration in the markets. And you might think at 27% correlation back in 2023, because it's actually quite an old chart, that's actually pretty disturbing. To have the top 10 stocks being almost 1/3 of the entire stock market, that might be very, very worrying. Well, it is when they go bad. But when they're doing well, it tends to actually lead into better S&P 500 gains. And as you can see here, when we have these huge concentration periods, such as, of course, the dot-com bubble and such as where we are right now, you usually have an outperforming market. Now, the buck will eventually stop, and that means that we need to be watching the hottest stocks. What are those going to be? Semiconductors and NVIDIA. As we know, this is an AI revolution, or at least it's the beginning of an AI revolution. And in the early stages, we tend to see huge amounts of exuberance and ridiculously wild figures. And in an upcoming video, what I'll do is I'll go over NVIDIA and find out how overpriced it is or how possibly cheap it is compared to historical standards when it comes to the markets. This is another interesting one if you're worried about a crash in June. Historically, all the way back to the 1950s, actually, not even just the 1980s, we've never seen the top put in June. So that's an interesting one. So if you're worried about a crash that is the top of the market, it's historically probably not going to happen. Now, history can be remade, but at the same time, that's where we're at. Also, secular bull markets, as we saw before when we're talking about buybacks, the more buybacks coming into the market, the more the market will tend to like it. And that's helping to push these equity values up. So if you ever see another big company announce a buyback, e.g., I think Lulu literally just did it over the last 24 hours, well, it's another one that stacks on to what is increasingly becoming a bubble-style market, basically the end or the late cycle of a huge overall investment. Now, that's an interesting point from the S&P 500, and we'll be looking at the charts together in just a few moments, but I want to go through some other interesting charts we've seen over the last week. This one here from the Hang Seng, obviously starting to show some signs of recovery. Now, similar to the global financial crisis, remember, China's gone through basically a hideous recession. It's starting to show improvements. And we've been arguing this for quite some time. And obviously, it's been very, very nice on the charts. But we're back to a very key important level. And we've just started to see turnaround stories coming through their real estate market. At the same time, it looks like China is absolutely stockpiling copper, which of course is one of the metals I'm looking at quite a lot. And this particular metal, along with iron ore, is being stockpiled at massive, massive amounts. Now, I don't think they're going to stop purchasing. Remember, they just made a new high. Why could they be doing this? Well, we're in a geopolitical situation. So at the same time, they realize that and they're stockpiling. So they've got 6 to 12 months in advance, just in case. It doesn't mean that copper is dead and it's probably going to sell off. We'll continue to watch the charts and not fall too much into the narratives. Now, this is a great one for Bitcoin traders. Have a look at this. US-based Bitcoin ETFs net flows. I can tell you the last 2 days were wild. And in fact, we just got $488 million of new inflows. And the previous session, we actually got massive inflows, which were in the vicinity of $800 million. So Bitcoin ETFs are getting massive flows as the market gets near a key resistance. Remember, it's been coiling for a while. So will it give us a breakout very, very soon? An interesting point, certainly something we are focused on, of course, looking at. So let's now take a look at the short-term potential bear and bull case scenarios. The first one here has to do with the NASDAQ. The NASDAQ just made a new all-time high, and of course it did it with less stocks than it really should. More stocks were actually declining than making 52-week highs. So is that rare? Well, yes, it is pretty rare. And as we saw, it was symptomatic of often periods of time where markets can go a little bit weak for a period, but they tend to be in end of cycles. Now, we've already talked about the dot-com period, and you'll notice here, was it the end of the market rally? Well, in this case, no. Was it a beginning of maybe a little bit of turbulence? Well, it was beginning of sideways here, turbulence here, obviously, and this was the 2021 highs. So it's a little bit disturbing to get it up at these points. But as you can see, stats are stats. 12 months later, still up. Overall, it's really the next couple of months that we're interesting in terms of the volatility. So do we believe that there could be some kind of weird transactions coming or a little bit more volatility in the market over the next month? Well, as we know, July, the first couple of weeks usually are the strongest weeks of the year. But short VIX futures just got a big diamond transaction. Basically, it's a dark pool sweep, and it came through right near the close. Now, that's suggesting that people are maybe hedging a little bit into the non-farm jobs numbers that are about to come out. At the same point, we've seen a couple of large transactions coming through on the Vanguard S&P ETF, VOO, and this tends to, it'd be a decent read. It's not necessarily the high, but markets sometimes push a little bit higher, and then they've seen some corrections. Obviously, we got this one here, which was the March into April correction, and this one was that August into October correction. So another big trade just coming through over the last 24 hours. And it doesn't just stop there. We got more trades coming through. IVW, iShares S&P 500 Growth ETF, also showing signs of big dark pool transactions. Remember, these are all dark pool transactions. So effectively, they're done by large entities with each other, off exchange, and then, of course, they have to report them. So is this a sell? Well, presumably, it's someone taking a little bit of profit. And again, it's happening all at these highs. Again, notice, though, when we get these types of correlations, the markets often drive higher before they fall. And that's why a lot of people see them as sell signals. They get trapped and they actually don't realize that you need to be following the price action as much as you can. IVV also showing huge amounts of aftermarket dark pool transactions. So again, this is a warning sign, something that we're looking at from the short term. But when you look at the long term, it's still pretty peachy. Buybacks across the board, potentially catching up to some of the other countries that are starting to show, or have been showing, some pretty nice recovery. And of course, an accommodative central bank and in the Fed, and of course, accommodative monetary policy in many ways to try to support the economy for as long as it can go. The last 24 hours, there were some bounces though, people jumping back in to the gold trade, one of our favorites at the moment. Obviously, we do think that gold can get to 3,000 over the next 12 to 18 months. Again, it's my prediction. Don't go and do anything with it. But it's just something I've been talking about for quite some time. And I am fairly bullish on, of course, the gold position. And it's looked a lot better over the last 24 hours, that's for sure, in terms of pick up from the trade action. We'll look at that soon. What about the last 5 days? Well, solar's had a little bit of a sell-off over the last 24 hours. Semiconductors have been leading, again, that concentration. And we've got a mixture of all sorts of different sectors out in front. Most importantly, we've seen recovery in the financial sector over the last 5 days, and KRE has stopped falling off a cliff. Now, that's important because, of course, we need the big banks to constantly be lending in this economy and therefore to be basically giving out debt. Debt creation will be a very important part of where we are in this market. So let's have a look at the S&P from a delta perspective. Was it positive over the last 24 hours? The answer is quite simply, yes, it was. Pretty cool. Positive delta. Very, very nice. And that basically shows us that, yeah, there were a little bit more buyers than sellers. Of course, we did look at the previous one with a little bit more trepidation. And this was one of the reasons that we were able to kind of spot that distribution that led to that 3 to 4% sell-off down to 5,200 the other day. At the same point, we've got an advanced decline line down the bottom, and you'll notice that it's kind of hovering on the S&P. We did see it on the Qs actually dropping off. So if we put the Qs on and we look at the advanced decline line, we'll just move this over so it's easier. You'll notice here that we haven't made a new high on the advanced decline line on the Qs. Again, it's just basically showing you concentration risk. Not necessarily a bad thing for the markets as long as it's in the right stocks, but something to, be wary of. Breadth is, of course, decreasing a little bit here, which is often considered a negative sign for markets overall. Again, concentration is not necessarily bad, as we've proven already with that chart before. US 500, what's going on here? Well, we're still in a bullish trend. And again, this is why narratives are very important to overlay with your price action. Ultimately, number one rules are your TA, your price action, follow the flow. So at the moment, we're having patience. And of course, we've been bullish recently with this idea that pullbacks will be met by bull demand. And it looks like the markets are trying to move up to the 5,400 level. Now, there's not too many changes, in fact, on what's going on with the overall options market. Basically, we're still in a positive gamma situation. We've still got a lot of support sitting around that 53.10 to 53.25, suggesting that if non-farm payrolls does make the market pull down, there's probably going to be a buyer trying to get in somewhere around here. And if it pushes up to 5,400, that's going to be the next key resistance for these markets, basically sitting right on there according to the options. So let's have a look at the options because they've been all important. And you'll notice as we lead into the non-farm payrolls, 53.25. Take a look at those puts, guys. Positive gamma situation. So again, the more the market pushes up, the more futures have to be purchased, the more positive inertia. Similar to what's happening in GameStop at the moment, to a lesser degree, of course. That's what's kind of going through here. 53.25, you'll notice the puts are extreme for the Friday, which suggests that the market will try to hold that zone if it does bounce off it. If it falls underneath, that's going to need some hedging, I would think. So again, negative gamma situation could come in, but you're going to want to be patient and react, I think, off the non-farm payrolls. And remember, the jobs numbers come out 1 hour before the market actually opens. When we have a look at the 10th, so next week, you can see again 53.25, a very well struck put level, and 5,400, a very well struck call level. And that's the same for the 21st, which is the options expiration of the month. Let's have a look through CTAs. What are they doing? Neutral on the NASDAQ, slightly up, and neutral slightly up on the S&P. So not too much stuff there. Brent CTAs, looking for a new update since Brent has improved. But I would like to see the CTAs come with that one. And gold CTAs, as we kind of suggested over the last 24 hours, they've started buying back up again. And that's an interesting point because, of course, they just broke through that key level and they're showing a little bit of sign of strength. And that's led into GDX, so gold stock, starting to play catch up. Let's go through a couple of other stocks now. NVIDIA, a lot of positive gamma here. Again, each time it gets through something, we're looking at spot price 12.10. On the Friday expiration, if it pushes a 1200 plus, it's going to cause, again, positive gamma situation. So the more this goes up through Friday, the more it'll eat into itself and kind of go ballistic. I would think it's probably going to try to hold underneath 1200, but if it starts strong and it keeps going through the middle of the session, it's probably going to keep following through. And you'll notice there are still huge amounts of calls as we go through the weeks. On GME, well, this one's the discussion point. It actually hit my target straight away. I was pretty surprised when we got that. So we got $50, pretty much, a spot price 47, close enough. The big 61.8 retracement, that was kind of what I was looking for. And this is just time and time again what I've said about GameStop. It's a gamble in my opinion. Obviously, a lot of you in the chat disagree with me on that, but that's my opinion on it. I think it's a gamble. You need to recognize it for what it is, and you need to be very protective with your money. And I say that because I want you to be protective of your money and not necessarily just get adrenaline flow. Remember, the number one thing as a trader or an investor is that you must have a good temperament. You must have patience. This is something I've learned over my 15 plus years of doing this. And really, if you don't have that, you're going to lose long term. So this is a very exciting opportunity for a lot of people. But as I kind of thought about the other day, when it bounced back down to that 20 to 25 range, it gave us signals that somebody was trying to buy it. Since that point, of course, Roaring Kitty has done nothing other than to really pump it through a myriad of different techniques. And people are getting on board. So we hit 50, but what I thought was really wild is when you look at these calls next week, 128. So you can see how wild it's getting. Now, I don't think it has anywhere near the amount of sold positions on it that it did last time in terms of being, heavily kind of oversold by the street. So this is a totally different movement this period, but people are getting on board. I don't know exactly where it'll go. I think 50, though, was a pretty sweet level. So good luck, and hopefully some people made a bit of money making the better temperament decisions. What about Tesla? Well, we can see here 180, 182.50 remains the call strike for the Friday. And we found a little bit of buyers. And again, I still think it's stuck between 170, 175 buyers. And we're basically just sitting with 180, 182.50 sellers. Let's move over to the options market. You'll notice here they're going sideways, so nothing much going on. And when we look at yields, you can see the 2-year and 2-year and 10-year, they're still pretty much trapped within the range. So because the ECB did a rate cut it's expected, like it's basically started to increase the chance of the US giving a rate cut in the future. I'm not so sure that's true based on some of the facts that we're seeing. And as we saw with that Sweden data, it kind of points towards maybe there's a little bit more to come if it is in fact the leader. TLT, that's holding its own. Again, treasuries will probably do okay over a multi-year approach. I don't really think them as a trade. And because we made the US 2-year onto the support, it needs to break below that for really most likely treasuries to get even more excited. ITB, some of the leads we use here, home construction, not a great day for it, not underneath the support. And same with Dow Jones Transportation Average, holding as best it can for now. What about central bank liquidity? On both sides, still quite accommodative on central bank liquidity. And the US dollar is right smack bang on that demand level ahead of the non-farm payrolls. I expect some wild action on currencies. The ECB stuff didn't really do much, but I think it's waiting for the jobs numbers to see whether there's a rate cut coming. Because remember, if they expect, let's say jobs are weakening, they might expect a rate cut that's going to weaken the US dollar theoretically and push it down. Remember, with non-farm payrolls, it's patience, react, don't predict. It's often going to go the wrong way first and then go the opposite way. That happens a lot. So make sure to pay attention to that. When we move over to copper, and because of the dollar being kind of weak, copper has recovered, but it's not through that 470 and daily 20 moving average. This will be an important level for copper moving forward, but I love to see it at 450, obviously waiting for a bit more information. Gold, nice breakout, broke through. I think that it's possible for gold to come back down to the 23.43 zone. A lot of anchored VWAPs and stuff I've been doing work with to kind of find an area, and I do like this area. And over the last 24 hours, as I mentioned, it came off this little order block in here, so it's looking relatively positive for now. Again, weekly close will be important for that. Silver also showing signs of recovery. So remember, silver has that hideous big shooting star in the weekly. Now, if it manages to squeeze above that, which this suggests it could be back into the bull trend coming off that first level, then that would be very, very good. But for now, silver pullbacks, you would think, at least on the small time frames, should be met with bull demand. So some pretty interesting stuff there. What about on the oil charts? Well, they keep driving up, but they didn't really they gave an investment level or a position level. They didn't give a trade level yet. So I'm still watching what's going on with oils from a trade perspective, at least in my opinion. And you can see here both UK oil and crude hit that major level that we talked about. Great if you're an investor and you're looking for it. And certainly that was a zone we spoke about for a long time, but not really what I would call an exceptionally good replicable trade level. Tesla still coiling. That's a lot of days. 1, 2, 3, 4, 5, 6, 7, 8. Stuck within tight range. I think it's going to get explosive. Keep watching, set alerts both ends. Nvidia keeps rallying. Obviously, we did the options before. This is an options game on Nvidia, so I'd just be basically watching the options and seeing how it trades. Still an upward trend for now. GameStop, one of my major thesis kind of concepts was that we would make it back to the 61.8 fib, and then maybe even the 75 fib. So somewhere in here is kind of where I expected GameStop to start to struggle. Look, those calls that are wild at 120, maybe they'll get it done. It's an interesting point. Certainly a key level, I believe, for GameStop. But what do you think in the comments down below? How high does GameStop go before it comes down, or will it just keep going forever? Let's move over to HSI. Again, the Chinese market keeps failing at 18.6. Not great. Could be doing a wipe here. I do think that the small timeframes have shown some signs of life, but it's just an early, and you'll notice it's got 1, 2, 3 rejections with wicks everywhere. So it becomes more imperative that we close above 18.6, and for now, hopefully this low is defended. So yeah, I'm watching this market very closely because a lot of you are going to say, Tom, it's a head and shoulders, it's going downtown, man. Well, we're not confirmed on that yet, but we certainly don't like these wicks continuing to come through here. UK 100 continues its strength. Nice. Obviously not the huge percentages, but we've been talking about this being strong. And it's actually been pretty good as a ratio trade, which is really all that matters when it comes to trades, ratio. Let's have a look at IWM. So we kind of said that maybe it's put in its low for now in terms of trading. You saw a slight positive delta over the last 24 hours, and that's kind of a good sign. Obviously, a lot of those other weaker markets were or weaker days were actually bullish overall. And what we're looking for here is wicks to show strength. So basically, we are looking for the wicks to come through. And then we want to see the weekly close for this. So I'll be doing an update on our show. So make sure to subscribe for that for the Russell 2000. I think it'll be a very interesting update. NASDAQ, well, it's run by NVIDIA and a few other companies at the moment. All-time high, still sitting around, waiting for non-farms. Not really loving the chart in terms of analysis. What I'm doing is I'm using the US 500 to use it as a tool. If you want to then trade the NASDAQ as your proxy, you can do that. And I usually do that. I usually think the US 500 gives you better technical analysis overall, and the NASDAQ can be the better trade. Now let's move over to Bitcoin. So 2 days of massive inflows right at the peak. Clearly someone's trying to have a go at it. You can tell there's a bit of money flowing in. Obviously we see that in the ETFs. It's pretty obvious this is a key level. Maybe it has a shakeout first. I'm looking for that 72.5 plus. And if it does, I think it could get kind of explosive. It's kind of like that coiling, maybe not even as much coiling really as Tesla, but it's holding that 20 moving average. And as we've said for a while, this is such an important zone. I mean, look at this. Look at how many times it's come up. And it's done a lot of the things that you would usually expect before a huge breakout. Now, if it does a failure, it's going to get brutal. But I don't think it's going to do that. Certainly Bitcoin improving. Now let's move over to the big news, which of course is the major employment numbers from the US. It's expected that unemployment figures will be at 3.9%. We'll have 182,000 new jobs. In general, I don't really think you need to interpret it too much. The key is going to be looking at the revisions, because remember, we saw in the previous video, 2 videos back now, that we had, an estimated of possibly 700K plus jobs in the revisions. So that's going to be a big problem there. And the non-farm employment change number, the revisions are going to be what I think the market pays more attention to. Will it be shocking? I think the revisions will be shocking. All right, subscribe, smash that like button if you enjoyed today's video. And remember, guys, if you're interested in anything else we do, newsletter coming back next week as well. So make sure to sign up for that, guys. Got a new kind of layout for it and stuff. So I think you'll be really enjoying that. And if you're interested in any of our courses or anything, we've got a flash sale on at the moment as well. Thanks so much, everyone. Bye for now. You have a great day, and we'll see you on the weekend.